Stay ahead with our weekly economic insights where we break down the latest personal finance news. Hi, I am Soumya Jain. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. We'll begin with SEBI's Working Committee's recommendation to raise the minimum lot size for derivative contracts to control excessive speculation. We'll also discuss launching the National Health Claim Exchange platform to revolutionize health insurance claim settlements. Additionally, we'll cover the record-breaking performance of the mutual fund industry with AUM and SIP investments hitting new highs. We'll touch on the approaching income tax return filing deadline and its importance for taxpayers. Furthermore, we'll examine the expected rise in India's inflation rate for June and its potential impact on various sectors. We'll also look at the recent hike in term policy premium by private life insurers and the introduction of the new GST Form GSTR 1A. The EPFO settlement of claim at an increased interest rate of 8.25% will also be discussed. Finally, we'll review the availability of foreign currency accounts in the GIFT City and the performance of market indices for the week. Let's start with SEBI's new development in the derivative markets. SEBI's Working Committee on Future and Options has suggested increasing the minimum lot size for derivative contracts from Rs 5 lakh to Rs 20 to 30 lakh. This recommendation comes in response to the rapid surge in derivative trading volumes. These measures aims to control excessive speculation and protect retail traders, as nearly 90% lose money on option bets. Let's check with our expert take section to see what our experts think about this. Harshit Patel, CFP-CM, founder at Invest Wissen, is joining us to share his viewpoint on SEBI's recommendation.
Well, thank you so much for having me on the show. Derivatives can be complex and carry significant risk. Retail investors often lack the expertise and resources to manage this risk effectively. Derivatives involve leveraging position, amplifying both gains and losses. The use of leverage can lead to substantial losses exceeding the initial investment, especially in volatile markets. The SEBI appointed panel on derivatives has suggested a slew of measures to curb the retail investments in derivative space. By calling for massively hiking the minimum lot size of F&O trades to Rs 30 lakhs from 5 lakhs currently, and also capping the options contract to just weekly, among others. Larger lot sizes means larger capital requirement. Retail traders would need more funds to participate in F&O trades. This could limit access to smaller investors who may struggle to meet the increased capital demands. Increased lot sizes may affect liquidity. Less liquid contracts could experience wider bid-ask spreads. Retail traders might face challenges in executing larger orders without impacting the prices. Retail traders must educate themselves about implications of larger lot sizes, understand contract specification, margin requirements, and risk management is crucial. In summary, while the change aims to enhance market stability, retail investors need to assess their risk tolerance, their capital availability, and trading approach. Seeking professional advice and staying informed about SEBI's updates is essential. Thank you so much.
Moving on to a significant development in the health insurance sector. The era of simplified health insurance claim settlements has begun with the launch of National Health Claim Exchange Platform or NHCX. HDFC Ergo successfully processed its first claim through this single-window digital platform developed by National Health Authority. The NHCX aims to streamline the claim settlement process by facilitating seamless information exchange between hospitals, insurance companies, and policyholders. It will use a common claim format across all insurers and hospitals, with most processes digitized and automated. The platform is expected to speed up claim settlements, reduce processing cost, and enhance transparency. The NHCX could improve insurance companies' efficiency and reduce operational cost, potentially boosting profitability. It may also increase customer satisfaction, leading to higher policy retention rates and growth in the insurance sector. Let's turn our attention to the mutual fund industry. The mutual fund industry in India has achieved new milestone. The asset under management reached an all-time high of rupees 61.15 lakh crore in June 2024, more than a six-fold increase from rupees 9.75 trillion in June 2014. The total number of folios stood at 19.1 crore with 15.33 crores in equity, hybrid and solution-oriented schemes. Simultaneously, systematic investment plan contribution hit a record rupees 21,262 crores in June 2024. The number of SIP accounts rose to 8.99 crores, showcasing the growing popularity of this investment method among Indian investors. The industry added 55.13 lakh new SIPs in June alone, while 32.35 lakh were discontinued or completed their tenure. The surge in AUM and SIP investments indicate growing investors' confidence in mutual funds. This trend could lead to more stable and diversified individual investment portfolios yielding better long-term returns. Now let's talk about an important deadline for taxpayers. The deadline for filing income tax return for the financial year 23 to 24 is July 31st, 2024. Taxpayers must file their returns before this date to avoid penalties and interest on delayed payments. Late filing can result a fee of up to Rs 5,000 and may prevent carrying forward of losses. Taxpayer can still file a belated return until December 31st, 2024, but with penalties. An updated return can be filed until March 31st, 2027 to correct mistakes or include additional information. However, an updated return cannot result in a reduction of tax liability. Timely ITR filing ensures compliance with tax laws and help avoid penalties. It also facilitates loan approvals and timely tax refunds, which can be reinvested for better financial planning. Now let's discuss the recent inflation trend. India's consumer price inflation is anticipated to rise in June, breaking a 5-month decline trend. The increase is largely attributed to soaring vegetable prices caused by extreme weather conditions. A Reuters poll of 54 economists forecast inflation at 4.80% in June, up from 4.75% in May. The prices of staples like tomatoes, onion, and potatoes surged by double-digit last month due to heat waves and floods in northern states. Core inflation is expected to remain flat at 3.10%, indicating a weak domestic demand despite strong economic growth. The recent telecommunication tariff hike will likely exert further upward pressure on inflation in the coming months. Rising inflation could lead to tighter monetary policy, potentially affecting interest rates and bond yields. Investors may need to adjust their portfolios to account for these inflationary pressures and their impact on various sectors. Let's turn our attention to the insurance sector. Major private sector life insurance companies including HDFC Life, ICICI Prudential, Bajaj Allianz and Max Life Insurance have increased their term insurance premium by 4 to 7%. This hike is in response to moderating bond yields, inflation concerns, and adjustment in reinsurance rates. Max Life Insurance revised its rates in April, ranging between 3% and 6%. The yield on long-term government bonds has dropped significantly over the past year, affecting insurers who are major buyers of these securities. For instance, the yield on 2063 bond has fallen by 31 basis points to 7.086% in the last year. While higher premium may increase cost for policyholders, they could potentially improve insurer companies' profitability. Investors in insurance stocks may see this as a positive development for the sector's financial health. Moving on to recent development in GST. The Finance Ministry has introduced a new GST form called GSTR 1A for amending outward supply forms. This new form is designed to help businesses better manage their tax compliances and reporting. While specific details about the form are not provided in the given information, the introduction of GSTR 1A is likely aimed at simplifying the process of correcting errors or making amendments to previously filed outward supply details. The introduction of GSTR 1A could improve accuracy in GST reporting and reduce compliance-related issues for businesses. This may result in fewer tax disputes and penalties, potentially improving overall business environment and investor sentiments. Now let's discuss the latest update from the EPFO. The Employees Provident Fund organization has started settling claims at the latest interest rate of 8.25% annually for the fiscal year 23 to 24. So far, EPFO has settled over 23.04 lakh claims, disbursing Rs 9,260 crores to members. The Central Board of Trustees recommended the new interest rate on February 10, 2024 and approved by the Finance Ministry on May 6th. EPFO clarified that members are not at a loss if the interest rate is declared at the end of the year, as any difference is paid to them if the declared rate is higher than the previous year's rate. The higher interest rate on EPF could provide better returns for employees, potentially boosting their retirement savings. This may also increase the attractiveness of EPF as a long-term investment option, influencing personal financial planning strategy. Lastly, let's look at the opening of FCA in GIFT City. Indian residents can now open foreign currency accounts or FCAs in international financial services centers like GIFT City. These accounts allow holding foreign currencies and can be used for overseas transactions, including gifts, travel, property purchases, and education payments. This development offers greater flexibility in managing foreign currency holdings and opens new investment avenues. It aligns Indian financial services with global standards, potentially attracting more foreign investments and enhancing India's position in international finance. That's a wrap for this week's Economic Insight. We have explored major shifts across various sectors, reminding us just how dynamic the financial landscape can be. Stay informed to navigate these changes and make informed decisions about your financial future.